All right. Good afternoon, guys. How are we? I wanted to do this live really quickly because, yes, we woke up to news, and many people will say that this was coming down the line. We could have foreseen this, but I want to comment specifically on markets. I guess there'll be people who have a lot of questions. So, yeah, just do this live and hopefully, I guess, really just talk about what's going on and answer any questions that you might have, and just generally just give some thoughts. I think just as a point of interest, this is very much going to be an opinion piece. I mean, look, if we look at the markets right now, the reaction to this today, everything is down. Everything is down. I mean, there's a few things that are up. You've got gold, you've got commodities which are up quite a bit. But if you're in the stock market, S&P, we'll go into details of that in a moment. But with that being said, we find ourselves in a situation where war is never a good thing. And I've got my partner's family over at the moment from Poland. And it's just one of I can't remember ever. I mean, I'm 43. This is the first time in my lifetime that I know of a war on European soil. And this is a big, big thing. And I don't know, it's weird to watch because you could tell that this was going to happen. And I think it's important that when you approach topics like this, you try and understand, okay, so why is this happening in the first place? And you look at it from both sides. I can see where this has all come from, but the outcomes of this is nuts, and it's going to destabilize potentially the security order in Europe, but not just in Europe, potentially also the world. I mean, China have been very, very quiet. China have not come out to condemn what Putin's done here, and China's very, very close with Russia. There is no doubt amongst analysts that China are going to be watching this very, very closely with regards to Taiwan. Now, different kettle of fish, maybe people will say, because obviously the key things here are that Ukraine is not part of NATO. Now, Boris, day before yesterday, rolled out a string of sanctions, which many people were saying didn't go far enough anyway, and was only going to be I guess sanctions that would have been expected from Putin and the people out in Russia, the oligarchs. They certainly would have had enough time to move money out, to ensure that they didn't have any significant amount of assets tied up in the sanctions that Boris announced. And obviously, there's this huge narrative around the fact that the Conservative Party received something like 2 million quid from Russian donors since obviously the last election. So there is a question mark over the influence of Russian oligarchs, and just the Russian political presence in Westminster itself. We can't get into that because that's just something of its own. But the sanctions haven't been anywhere near enough. I mean, even the States came out day before yesterday, very, very light sanctions. The only people who really did something that I guess would have made Putin stand up were Germany, when they said that basically they're going to put on hold the certification of the Nord Stream 2. Now, Nord Stream 2 is all about gas, oil, energy, essentially. That's what it's about. And this is where we get into a sticky wicket, because there's nothing that, from a legal point of view, the US can do, the UK can do, Europe can do around intervening in Ukraine. I mean, you've got to bear in mind that this entire thing is stemmed from the fact that Ukraine used to be part of Russia. Obviously, they voted against, being part of Russia and that empire in more recent history, and it's always been the desire that Ukraine would join NATO. Now, Putin does not want that. And because there have been no assurances given that Ukraine will not be allowed to join NATO, this has basically brought this entire thing around. Now, because Ukraine is not part of NATO. There is nothing that anyone can do militarily in terms of putting boots in the ground. And this is something that Joe Biden has been criticized for. He came out yesterday, I think it was, and said that he will not send in troops to fight Russia. Now, aside from the fact that Russia is a massive, massive, massive nuclear country with nuclear power, as is obviously the UK, United States, France, and pretty much most of the developed world, Western world, you're kind of like stuck because it almost feels as though now Russia can do what they want because America's not going to go in. We're certainly not going to go in. Europe's not going to go in. NATO's not going to go in. And so when they talk about the destabilization of the European order and that security order, not even mentioning Taiwan, we can talk about Taiwan a bit later on. This is a really, really big, ballsy move. And it's going to have ramifications for a very, very long time. Now, sanctions are the most likely route that these countries are going to go down. And we're starting to see that. I'm keeping my eye on news at the moment to see if we see anything come out from the European Union. I know that they were speaking a little bit earlier. NATO was speaking a little bit earlier as well. But sanctions are the best way of actually doing this. Now, how severe these sanctions will be and how much of the sanctions would have already been priced in and calculated and accounted for by Russia is anyone's guess. But some of the things that they're saying that could really, really hurt Russia, which I hope they do, will be bringing to bear some sanctions in the financial sector around, the SWIFT payment system so that money cannot physically move in and around Russia and from Russia. That will be a really effective sanction. But it will be interesting to see what package of sanctions actually come out over the next, I guess, 12 hours maybe, to see where we are. And that does bring us on to what's going on at the moment when it comes to the markets. I will share my screen with you guys so you can see what's going on. And maybe answer the question of, okay, so what does this actually mean for those of us who do have money in the stock market? And, if you are worried, what do you actually do? The reality here is that, I often talk about the fact that, there are factors that we can control. There are factors that we cannot control. We can't control any of this stuff right now. So we are kind of at the mercy of whatever the markets do in terms of a reaction to this entire thing. Now, I'm going to bring up my screen very quickly just so you can see the extent of the red that we're seeing right now. And I'm going to point out maybe some territories which I think will be interesting because these numbers could get worse. We just don't know to what extent just yet, but they could get worse. So, what you're seeing here, this is investing.com. So this is a website. And if we go on to, let me just stretch this out very quickly. Right. So these are all of the major markets across the world at the moment. As you can see, it is a sea of red. Like the only thing that is green here is the Vix Index. Now, the Vix Index, if you don't know what it is essentially an index which basically measures volatility. So how people are feeling about a market over the next 30 odd days. It gives you a sense of what the general feeling is. And the Vix Index is up 18% today, which means that there is more fear in the market, more volatility is to be expected in the market. If you're using Trading 212 free trade, or you're getting your notifications from, things like Yahoo Finance, you probably would have had a ton of notifications today talking about the markets, where they are, that kind of stuff, stocks movements and all this kind of stuff. That's to be expected. But what we're seeing at the moment, even the S&P 500 is down 1.84%. Now, some people will say that's actually not too severe. You look at the NASDAQ, 2.57% down. You got small caps, the 2000 there, 1.78. Now, interesting, if you look at the FTSE 100, which is the UK market, down 3.2%. You got the DAX, which is German, down 5%. We're seeing big movements during the day. Not as much as what you would see if you look at, the Russian markets. And this is where you can start to gauge how impactful and how effective some of the sanctions that have already been announced have been on the market. So you can see the MOEX down 37.86%. You've got the RTSI down 42.16%. Now, interestingly, it will be interesting to see what actually happens when further sanction packages actually get announced and see how far these actually move. But if you're looking at this, there is no good place today unless you're in, kind of like gold or something like that. I think the numbers for gold right now, it's at a, let's have a look and see actually. Gold is up massively today. I was reading actually, and let me see if I can find it on one of my other tabs here. Where is gold? There we go. So, yeah, it's up 2.5%. Actually, no, that's crypto. 1 second. Let's click onto this quickly. Yeah. So it's up massively. I think it's at its highest point it's been for almost like a year plus at this point in time. And we're also seeing the cost of oil, crude, actually increase. So that's over $100 a barrel right now. Now, what does that actually mean? And this is where we get into a bit of a sticky wicket. Now, obviously, I've spoken a little bit about inflation on the channel and the fact that in the UK, we're at a 30-year high when it comes to inflation, 5.4. We don't have the more up-to-date numbers. In the States, inflation is running at, 7+%. I said in a video that in April, we were due to be approaching inflation at a 7% rate. That number's now up at 8. These oil numbers are going to impact the inflation that we're feeling right now. Now, as a country, apparently we only get 3% of our oil and energy from Russia. However, with that being said, that does not mean that we're not going to see the impacts of any of this domestically. I think that we will. And it's going to be highly dependent on whether or not we see other countries, maybe, the states, OPEC maybe, increase their production of oil to counteract some of this. But again, there are some issues even with that. So we are going to find that if this doesn't impact our inflation numbers, I'll be very, very, very surprised. It most definitely will impact our inflation numbers, which means that things are going to cost more domestically. And this is a really big factor. We're kind of set aside when you look at the geographic layout of Europe. Obviously, we're an island surrounded by water. Mainland Europe, you have a look at countries like Germany, for example, France. They are more heavily dependent on Russian energy, gas, oil, than we are. And again, this is where Russia has a little bit of power here. If there is a response that they don't like, you could say, you know what, we're going to divert all our gas, and that will hurt mainland Europe, countries in terms of the cost of gas, cost of living, inflation, which is already surging across many territories already. And that leads to the conversation that you've probably been reading a lot about over the last couple of days around trying to stifle. And it will be interesting to see how this is introduced into the package of sanctions that Europe brings across, how they can essentially, moving forward, limit the influence that Russia will have because of the level of dependence that these countries will have on Russian oil and gas. This is a really big political play, and it's a massive political tool, one that even through the last week or so has been there as the murmurs as something that Russia could basically use, because they know completely 100% that if they diverted energy, it's going to hurt European countries, and it will hurt us a little bit as well. Like I said, we don't have a massive dependence on Russian energy. It will be very, very interesting to see how the sanction package, however it's put together, and what it does in terms of trying to limit Russia's influence in that regard. I would love to know if there's anybody watching the stream who is Russian, and because I'd love to hear their thoughts around what's going on at the moment. I mean, from a security point of view, I can kind of see it, but at the same time, is this the only way that you could get to your goals and your objectives? I know that, look, the West were not willing to basically say that, you know what, we will not allow Ukraine to join NATO. But at the same time, there are two sides to that coin. As a sovereign state, Ukraine have the right to choose what international bodies they want to be part of. And if they say we want to join, which they have been very, very vocal in saying they want to join NATO, well, that's a choice that they are entitled to make. But again, from the security point of view, you can also see that actually Russia, Putin's view is that that represents a significant risk to Russia. It's really, really fascinating and interesting to see from a political point of view when you look at both sides of the coin. Is this the best way of going around it? I really don't know. The coming days, I mean, today is a very, 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 very big day in terms of what the United States decide to do, what Biden decides to do. I mean, Trump's already been at it over the last, I think, over the last 24 hours or so, praising Putin, saying this is a genius move. Then basically saying that Biden's weak. I mean, whether that is appropriate right now, people always play politics within their countries, but is that the right thing to do right now? Hey, who knows? But today is a very, very important day. We know troops can't go in. Troops will not go in. So the sanctions and the package of sanctions are the biggest response that the Western world can give. And China are watching this massively, because if the Western world does nothing, China will look at that and think, okay, so it's all bluster, it's all hot air. They're not going to do anything. And let's look at China. China is a completely different kettle of fish, because China has a lot of US debt. I mean, the damage that they could inflict on the US because of the amount of debt, is huge. But with Taiwan, it is slightly different. Like, okay, so Taiwan as a geographical region it's not the same. Like, again, they're surrounded by water. But one of the things that Taiwan does have is they are the leaders when it comes to things like chips. So when you're investing in companies, Taiwan Semiconductors, massive company. If you think about where the world is actually going right now, electric vehicles, VR, or augmented reality, chips are kind of like the oil of this new age digital revolution. Taiwan is at the forefront of that. Many people will argue that the US will get involved for that and for that alone. Because if you think about the tech giants, they are all US based. There is a huge dependence on semiconductors, chips, materials. Taiwan is literally at the forefront of that. So today is a really, really, really big day as to what's going to happen. The markets will continue to be volatile. Like, the markets do not like war. They do not like it one little bit. And if you are holding a portfolio right now, you just got to kind of sit tight. I mean, again, this is where we go back to the basics, right? And we start asking the questions of, did you really understand the risk? Are you, from a timeline point of view, do you feel that you're positioned properly? I know people that, have been selling out of the markets for the last maybe month or so because they didn't like the volatility without this even being in the equation. So if you're looking at your portfolio right now, and I'll take some questions in a moment, you need to look at it from a pragmatic point of view. Like, okay, look, if things get worse, are you okay with it getting worse? Do you see the opportunity in it getting worse if you're pound cost averaging your money into the markets? Do you have the time, number one, and do you have the stomach to sit there and, kind of like sit this out? The reality is that if you have a look at some of the charts around, when wars have basically happened, typically speaking, once a war comes to an end, you'll see the market kind of take off. But the issue with that is most conflicts they're protracted over a very, very long period of time. And this has the potential to basically go on for years and years and years to come. I mean, Ukraine is a very, very big country. It's huge. Now, what Putin has done today is try to capture obviously Kiev and some key strategic environments. But as you get to the western side of Ukraine, the sentiment is that that part of the country more aligns with the EU, more aligns with Western sentimentalities. And so, will they be able to hold, the western side of Ukraine from a logistical military point of view? Who knows? I don't know. I'm not a military expert, all right, of any sort. It's a big country. So this is likely going to be a protracted conflict. The danger is that, and this is probably one of the big fears. NATO was speaking a little bit earlier on. They were saying that they're going to bolster in their defensive postures, and that is simply to protect countries that are NATO members that are around the periphery. Poland, Estonia, Lithuania, Latvia. Those countries now become a little bit weaker because of that incursion into Ukraine. Now, Putin's not stupid enough, I think, to basically try to, pick a fight with any of those countries because of the size of NATO and the capabilities there. But that still doesn't mean that he doesn't have free reign to essentially continue along the way that he's going right now, which is why I keep coming back to the sanctions. Today is a really, really big day because this will potentially change the face of the way Europe is currently set up. And many people will say, well, Pete, Brexit and all that, why the hell do we care? It will have it. We will still feel the impact of it because regardless of geographical ties and, the, I guess the perception of the EU and our departure from that, we are still economically and from a market point of view deeply entwined with the EU and the way the world basically works. So we're not immune to the impacts of this. But anyway, let's get to some of the comments that are on here. It'll be interesting to see what you guys are saying. Yeah, 012 0161. Yeah, it is scary time, man. I couldn't believe it this morning. I mean, yeah. It's mad, isn't it? The thing is, imagine living in Ukraine and you hear this morning, like just getting out of bed, like crack of dawn. I mean, it was still dark if you watched some of the footage. Explosions, and you're thinking, what on earth is going on? And then, you realize that, tanks are heading towards your city. I can't imagine what that must feel like. It must be absolutely terrifying. If you're in Ukraine right now, and if you've been paying attention to the news, you're seeing massive traffic jams, people desperately trying to get out. But the question is, where do you actually go? Where do you go? I mean, people are saying that this has been planned for years with the annexation of Crimea, right? This isn't something that's happened overnight. This has been strategically planned over a protracted period of time. The buildup of military assets around key locations, even, he's had incursions via Belarus, right? This has gone on for a very long time. This has been in the planning for a very, very long time. There's talk about cyber attacks. The US are gearing up for cyber attacks from Russia. And this is all strategic. It's all very, very strategic. But I can't imagine what it must be like right now if you're in, a place like Kiev, and you're hearing all of this. And the sad reality is that Ukraine's military don't have the same capabilities as Russia. I mean, the military force in Russia is just absolutely insane. If you're being constricted, I mean, they're asking for anyone who is able-bodied who can carry a weapon to take up arms. That's scary. That's really fucking scary. I mean, geez, I wouldn't even know where even to begin with dealing with that. It's nuts. Will natural gas go up? We've seen the prices of crude and all of that go up today. So, I mean, if people are playing in the futures and options, if you're longing and shorting these kind of things, people probably would have made money from this today. And believe me, don't get me wrong, people will be making money from this today, regardless of the circumstances. We talk about investing dispassionately. You have people who will have the ability to be able to do that. You could call it profiteering off war. and of bloodshed, but people do this all the time, all the time. Let's get this. What do you do with my VWR down over £100? Do you sell or just hold? I'm in this fund for 13 years. If you're in it for 13 years, mate, then I mean, I can't tell you what to do because it's your decision. It's your money at the end of the day. The main thing you need to be thinking about, mate, is, are you okay for it to be down over a protracted period of time? If you've got a 13-year time horizon, then market cycles will tell us that you should be okay, but nobody can guarantee that. So it's really important to make sure that you're comfortable with the fact that if markets continue to be volatile and they're volatile for the next 2-3 years, or we see a market dip over the next 2-3 years, that you're happy for it to be sat in there. You're happy to continue to invest into that pound cost average in with the view of a 13-year. But the decision of what to do is down to you. This is why we always talk about, when you're investing, your capital is at risk because there are so many factors that we can't control. Anything could happen out of the blue, just like it is happening right now. It's really difficult to be able to gauge and be able to tell, but you have to go back to your plan, mate, and just make sure that your plan is still intact. And don't be afraid to change tact if you need to. If you feel 100% that you need to change tact, then change tact. There's nothing wrong with that. Most people who are investing and who have, good amounts of money in the market right now will probably be reevaluating where their positions are and what they're doing. So it might be prudent to do that as well. Someone's saying here that they worry that it might lead to World War III. You know what? In order for that to happen, I mean, I don't know if you watched Putin's address yesterday. I was searching for the transcript a little bit earlier on. I mean, some of the stuff that he said was really chilling. I'm going to paraphrase this, but effectively what he basically said was, for any outside countries, so this is, talking to the West, if you intervene, he said he's covered all of the eventualities, he's thought about everything. If you intervene, he is willing to do whatever is necessary, and it will lead to consequences that we've never felt in our history. So he's basically saying that, all cards are on the table. Now, I don't think it will lead to World War III. In order for it to lead to World War III, I think it would need the intervention of NATO. If NATO gets involved, the US has got to get involved. Most of Europe has got to get involved. The UK has got to get involved. Then we're talking massive, multiple world powers, nuclear powers against Russia. Then it will get into World War III territory. At this point in time, and this is where he's been very, very clever, Ukraine is not part of NATO right now. So an attack on a NATO state is deemed as an attack on all of them, everybody. So it's like a club, right? If one person gets jumped, everybody piles in. At the moment, Ukraine is not part of NATO. Putin is not willing to run the risk that Ukraine becomes part of NATO. And that's why he's done what he's done. And I don't think it will get to World War III status unless there is NATO intervention. But NATO has no grounds to intervene. And this is, I guess, where Putin will be very, very careful unless he attacks a NATO member state. The closest NATO member states, if you look at the geographical setup right now, are Poland, Estonia, Latvia, Lithuania. Those are the 4 closest ones. If something happens there, then NATO's in. When NATO's in, we're all in. Then you can have a look at World War III potentially. But at this point in time, I don't think it will be. Someone's asking, good time to buy. Depends on what you're buying, I guess. I mean, if you're buying gold, then absolutely, probably, because, in terms of conflicts like this, people will obviously move towards safer havens, safer assets, which will include things like your gold, your silver, your crude oil. I mean, just looking at the chart right here, silver's up 1.14% today. Crude oil's up 6.23%. I mean, that's huge, massive. It's absolutely huge. So it depends on what you're buying. If you're talking about individual stocks specifically, look, the fundamentals still count. Research. If you have, you certainly wouldn't buy, anything to do with Russia today. You just wouldn't, because why would you? I mean, with the sanctions going in, that's going to be huge. And you need to look at this holistically and think, okay, so if the sanctions do go in and Russia does retaliate, if he does retaliate, what impact might that have on markets, sectors, companies that you're choosing to invest in? At the moment, I'm not buying anything without really understanding what's going on and trying to get an understanding of what the outlook might actually be. Now is certainly not a time to be buying stuff blind. It's really, really not. And if you have YouTube channels telling you, oh, go buy this, go buy that, you need to be very, very careful. Now is not a time to be buying stuff blind because everything's down and everything's red. It's not the right time to do that. You need to be patient. You need to have a look at what's going on. Obviously, if you want to put money in, then by all means, but just know the risk is very, very high right now. I'm not buying anything. I'm sat tight. Like I said, I don't typically hold a portfolio which is 100%, stocks. Yes, I've got individual stocks, but my strategy is a core satellite approach. So I've got a lot of money in index funds, ETFs, those kind of things. I've re-looked at my strategy for some of those. Some of them I've disinvested part of it. Some of them I've left in there. I've had a look at the markets based on my goals, and I've taken action on what I think works best for me. You've got to do the same thing for you. So just don't go buying stuff without doing your due diligence, without doing your research. Don't get carried away because, there are a lot of factors. This is just a cherry on top of a already very, very large cake of challenges and pressures that we're dealing with. I mean, inflation, you thought that was bad, and interest rate hikes. Now we've got this to contend with. Like, yeah, it's a very difficult time right now. London is the shame of the world. We have laundered, more Russian dirty money than anyone else, and we're still doing so. Yeah, I mean, this was in conversation day before yesterday. The fact that there is so much money, Russian money, awash in the city, and a lot of it is sat in property. But this is one of the other things that they're talking about: the fact that Putin's approval rating at the moment, it was apparently around about 40%. Now, when he annexed Crimea or something like that, it was something I think they were saying it was about 60%. He, in order to stay in power, needs a high approval rating. Now, historically, if you go to war, everybody it's very patriotic. You support your country, therefore popularity goes through the roof. So it'll be interesting to see what happens with Putin's popularity off the back of all of this, which is why I would love to have a conversation with Russian people right now to see how they feel about what's going on. And the weird thing is, Russia and Ukraine, they are so closely aligned in terms of just politics, language, the whole thing. They're like brothers pretty much. It's like fighting your cousin, like fighting your twin. It's like that. And it's really, really bizarre to see this. But we've laundered so much money, and we haven't done anything about it. I mean, we could have closed these loopholes all the way back in 2014, right? That's when Crimea was annexed, by the way, 2014. It's absolutely nuts. We're in 2022. That's 8 years for us to do something. We did nothing. I mean, London's called Londongrad because we've laundered so much of that money. It's absolutely unreal. And with Putin, obviously, Putin's a very, very wealthy man. There are people saying that actually he's the richest man on the planet, but not all of his money is in his name. I mean, how can you keep all of your money in your name? You can't. So apparently what he does is he gives it to oligarchs who go out and buy properties and invest it and move the money around for him. And the consensus is that, he needs a good popularity rating. He needs to remain in power so that he can put pressure on the oligarchs who are looking after his money to return his money when he actually needs. I mean, after all, if you're looking after, 100 million or 200 billion or 5 billion for someone who's in power, then all of a sudden he's not president anymore. He hasn't got the influence that he no longer has. If you got 5 billion quid in the bank, would you be incentivized to return 5 billion quid when he asks you and when he has no authority or no influence over you? Probably not. So there's that element as well that people are speculating as one of the reasons why he needs a really key and really, really good approval rating to remain in power. It's very, very interesting. What's your thoughts on stock physical gold? I mean, look, yeah, in times like this, like I said, stock gold's up 1.4% today. So if you do have gold, or if you're looking to diversify gold, those kind of commodities will be a good bet right now to hold, just for a little bit of security. Hi Pete, young investor from France here. Do you think this Russia crisis could impact UK banks? They are exposed, even if UK are not part of the EU anymore. Could this also impact the euro pound rate? Yeah, I think it will potentially. I mean, I'm just trying to think in my head here, just given my experience of UK banking and money that gets moved around and so on and so forth. There will be an impact. Whether it will impact the banks from a sustained share price point of view, yeah, probably will. Um, but then again, banking is banking. People will pull levers and do things and untoward things under the radar. I mean, look, to be honest, this would this has been in the planning for such a long time. Things would have been moved around, and things would have happened in the background to limit damage. But from a sustained share price point of view, yeah, I think it could potentially impact it. Will it 100%? I'm not sure. I mean, it's the markets really at the end of the day, isn't it? I mean, we are still closely linked to the EU, from a even from a just a financial infrastructure point of view. We're still linked to the EU massively, so I think it could have an impact. But to what severity, I don't really know, mate. How is that a security risk when Russia has all the nuclear power that it has? Um, what do you mean? How is that a security risk? Let me know, Cardano. Um, okay, I'm trying to think. I'm trying to make sense of what you're asking there. So, I think what you're asking there is how is Ukraine a security risk if they're part of NATO? I guess is what you're saying. So, basically, what happens is if you think about NATO, the biggest contributor to NATO is the United States. Now, the US and Russia have always had a quite a fractious relationship. So, if you imagine at the moment Ukraine used to be part of the Soviet Union. They broke away. Now, if Ukraine becomes part of NATO with the US being the biggest contributor in there, what typically happens with NATO is you then have like bases. So you'll have like air defense bases, missile bases, you'll have bases where you'll have jets. And the way Putin views that is that is a security risk to Russia, because now you have NATO, where the US is the biggest contributor to their budget, literally across the border from them. So if they had air defense systems, all that kind of stuff there, that in Putin's mind is a huge risk that he is not willing to essentially tolerate. I mean, you've got to go back in history, when Ukraine broke away from the Soviet Union. Back then, there was this conversation where Russia was adamant that they didn't try to move any further towards the Russian border, i.e., moving east. But since then, you've had countries like Poland, Estonia, Latvia also join NATO. So for them, from Putin's point of view, it is a risk to them, regardless of the nuclear powers, because again, most of the NATO member states, well, majority of the NATO member states are also nuclear powers. So it's a really, really interesting kind of bit of history to go through. China can only invade Taiwan in April and May of each year. This is what has saved them so far. They hate China. Yeah, I mean the relationship between the two of them is not great. But like I said, Taiwan and China is going to be watching this very, 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 very closely because the I guess if you look at the security order, I mean the US has done. The US is not obviously. I have mixed feelings about the US. From a political point of view, the agendas, the things that they do, foreign policy, it benefits the US, but oftentimes they leave a wake of destruction behind them. And the US for the longest time have had a lot of power. And it feels as though they've lost a lot of their power now, not just because of having Trump in the building who tried to cling on to power as though a democracy didn't exist. You know, I think that's definitely impacted their leverage and their power on the world stage, but also in the fact that their military has been quite stretched from the likes of Afghanistan, Iraq, and all of the previous wars. I don't know whether they still have the appetite for that kind of stuff, which isn't necessarily a bad thing, depending on what side of the fence that you're sitting on. But the world order as it is, I mean, China has very much been always looking at the US and will kind of toe the line a little bit as far as they possibly could. So if the Western world does nothing significant right now, it will only embolden China when it comes to Taiwan. It really, really will. And then, you know, you're looking at a completely different kind of view. I mean, it's a very, very interesting scenario to look at. It really, really is. But I think this moment right now has the potential to reshape the way the world order currently works. Don't know whether that will be a good or a bad thing. I guess again, it depends on what side of the fence that you sit on. I'm certainly not a political scholar of any kind. I look at this purely just from a market point of view, but the historical pretext that comes with this is really fascinating when you start to look back over what's happened and try to figure out how we got to this point. You know what I mean? And it's a story of countries, in particular the states, a lot of the time wielding power over and influence over other countries. It's really, really interesting. I don't have the VWRL. I don't have that one, so I'm not going to hold or sell it because I don't have one. When I heard the sirens like they had in the Second World War, it was terrifying. That is what the clever people woke up. I know, mate. Listen, I really, really, really could not imagine what that would have been like. I mean, it's 2022. It's nuts. It's absolutely crazy. It's bonkers to think about that. I mean, yeah, I can't even begin to even think about what that's like. Should I hold on to my S&P 500 shares and Life Strategy 100 equity funds? And should I continue putting money into the emerging markets and FTSE excluding UK fund? Again, you've got to think about what your goals are, how long you're looking to invest for, whether you're happy or not to be looking at potential market volatility and the fact that the markets could trail off for a period of time. You've got to answer all of those questions to know what you're going to essentially be doing. It's difficult because you can, on one hand, you can say, get out, cash everything in, don't invest. But actually, the markets, look, this is a very sensitive time right now because this literally just happened today. So many people may say, oh, this is a knee-jerk reaction from the markets with everything being as red as it potentially is. And let's not forget, by the way, the markets have been red consistently for quite some time since we started talking about inflation. And that's been for a very, very long time, right? So this isn't just something that's happened overnight that, the markets are in disarray, the markets are red. This has just added something onto it to cause even more volatility. That's the important bit to remember here. Now, this is still a big consideration in the entire equation. It's something else to worry about. It is definitely going to impact inflation numbers. Therefore, it's going to impact monetary policies and interest rate hikes, supply chains. It's going to impact all of those things. Now, if we take a step back and look at it from a holistic point of view, what does that then mean for the investments that we hold? Well, we don't know. Markets will be volatile. That's what we do know. We don't know whether over the next 2 or 3 weeks, the market kind of like figures out, right, what is likely to happen. Volatility drops a little bit. We start to see the market maybe not give, a huge amount of growth over a short or the long term, midterm, roughly, right? But it might even out and just give us a nice, even field to basically, invest in and work upon. But the opposite could also happen. The question is, if the opposite does happen, are you okay with that? Are you positioned correctly to deal with that? If you've been buying individual stocks the entire time, then, right, okay, now we're talking sector specific stuff. You need to go back to your original research to find out, right, why did I buy this company? Could this impact the company? If you're buying things like the S&P 500, I mean, just looking at the S&P 500 right now, the S&P 500 is down. Where are we? I want major indices here. Major indices. The S&P 500, let me just share this with you as well. You can see what I'm looking at. The S&P 500 is only down 1.85% today. All right. So, yes, we've seen a little bit of a market reaction. It could go down even further. We just don't know at this point in time. The question is, back to the drawing board. Are you okay with the level of volatility, the level of risk that these situations potentially bring along with them? March 16th is going to be a very, very important day. That's the day that we're going to know what the rate hikes are going to be from the Fed and Jerome Powell. Now, I create content on the channel, obviously, which is all about the basics to investing. It's all about being sensible. It's not necessarily the quick, you're going to make a ton of money here. It's not sexy. I completely get it. But those fundamental principles right now really do matter. So with everything that's happened, we already know from the Fed that interest rate hikes are coming in March when Jerome Powell speaks. However, in January, when he kind of threw it out there and gave this indication that this is what we're going to do, he's signposting this like they always do. One thing he didn't do was signpost how much the interest rates will be hiked by. There is a consensus to say that it's going to be 0.25%. That's what we did here in the UK recently. Although there was a vote for it to be a little bit steeper than that, which, when you start increasing interest rates quickly over a short period of time, you then have to bring in the conversation around debt bubbles and all that kind of stuff, which in itself could be disastrous if you look at the numbers, right? But anyway, 0.25 is what the general census is likely to be for the interest rate hikes. I think that will be priced in. And I think that is already priced into the markets in terms of an assumption of what the possible rate hikes will be. The issue that this brings along is the fact that if the inflation numbers out of the States start looking at something like 8%, they don't go down from the last CPI numbers, which was I think it was 7.1 or something like that, then potentially what that means is that Jerome and the guys at the Fed will have to increase rates quicker. And the first increment may not be 0.25%, which is possibly priced into the market right now. It could be 0.5%. And if it is that priced into the market? I don't know if it is. I don't think it is. But if he does come out, especially with the pressures of, crude oil going up today over, $100 a barrel, I mean, they're already talking that the impact of that is 20-25% already. So if we start getting to 8% inflation numbers and the Fed has no choice but to increase by 0.5%, God forbid, even more, I think the markets will react negatively to that. The question is, are you prepared? These are things that we have no control over, which is why the basic stuff that I talk about and the stuff that I talked about on the podcast this week with Jax, who's an investment manager, he sits there, builds portfolios for people. We come from the same place. When you're starting to invest, your goal, how long you're looking to invest for, the risk that you're willing and able to take dictates what you buy, how you invest, and your approach to investing. There have been too many hype merchants who have encouraged people to invest on pure vibes, getting people to buy individual stocks here and there, where actually I don't pay much attention to those channels, but I wonder what they're talking about now. Because these are the fundamental, this is where people get hurt. In environments where you can't control the outcome of your decision because of the overbearing and often multiple, numerous impacts or factors that can impact your outcome. It's very, very simple. This stuff is not a joke. It really, really isn't. So you just go back to your strategy, man. I know that's a very, very long-winded answer, but you have to go back to your plan, your goal, your strategy, just revisit. And again, just ask yourself, look, are you happy to have money in the markets if things are going to get volatile, if things are going to go up and down? If you are, stay the course. If you don't have the stomach for it, then you also need to make the decision that is right for you. And look, there is no right or wrong decision that you can make, as long as it's a decision that you are happy with and the decision that will help you sleep good at night. That's the most important thing. I own Polymetal International shares, and they are now down 40% today. They own gold mines in Russia as well as neighboring countries. Not sure what to do. London Stock Exchange listed as well as Russia. Yeah, mate, listen. Did you diversify? I guess is my question. So I talk about diversification. People think it's boring. People think it's unsexy and stuff. Diversification is really important here. If you're looking at picking a company, I often ask people how you're going to hedge your position. So let's take Tesla as a prime example. Obviously, people know that I love Tesla and all that, right? But if I'm looking at Tesla and I'm looking at EV space, what I'm looking for is, right, okay, so Tesla's the front runner. That's my favorite stock. But okay, what happens if Tesla don't do too well? Who's the competitor that could possibly take market share from them? And therefore you buy Tesla and X company, maybe two others, to hedge your position. So the question would be, did you hedge? Did you have some kind of diversification strategy behind that? Do you hold another company that perhaps is in the gold sector that today will help you counteract the 40% loss that you're down by? I mean, look, that may be one that you've just got to hold. You probably got to hold it and see what happens. Again, the sanctions, though, are going to be really, really important for this. It's a tough one, mate. It's a really, really tough one, mate. Yeah, if it's part of a diversified portfolio, look, you've got to take the rough with the smooth, right? I know it's painful seeing it down 40%, but it may just be a case of you got to hold that one for a moment. And just go back to your research, mate. Did you have like any scenarios where actually you have an exit point where you thought, okay, if this happened, I might actually get out? You got to revisit some of that stuff, I guess. How do you think this affects China? I've seen a lot of Chinese shares fallen. I mean, look, even the Chinese markets are down today. All the markets are down today because, you know, news of war is not good. It's just bad. So even the Chinese markets are down. Everything is down. So until we start to see, you know, how this is going to kind of like bear out, just expect that all the markets go globally. I mean, there isn't one. There is not one market that is safe today. They are all down. Let me just extend this quickly. They're all down. All of them. There's not one that is safe. You know? So That's the only one is there. And again, that's the Vix Index, measuring fear, measuring volatility. I mean, that's 12.58% today, up. Tells you there's a lot of fear. There's a lot of expected volatility to come. So, you know, nothing is safe at this point in time. Nothing is safe at this point in time, because the world is so globally interconnected with the way we actually trade and invest, and just the way we live our lives now. Hmm. Cheers, dude. Appreciate this, mate. Haven't caught up for a while. Hope you're good, mate. I'm really, really good. Thank you. Yes, still fighting the good fight, and at least trying to, provide some, I guess, balance in this investing sphere on YouTube. But your brain hurts with all that. Yeah, I mean, look, it's one of those situations where, look, the thing is, right, it's so interesting to read about these kind of things, particularly when you try to get back into, right, okay, let's go back a little bit, because oftentimes when you see stuff in the headlines, right, it's very easy to take that headline as like the whole caption, right, and you form your opinion of that. But if you go back and have a look at, okay, right, and it's, I guess, it's being an inquisitive child, right, always asking that why. And one of the things that I used to do and always kind of advocate is, when you ask why 5 times, you kind of get further down the rabbit hole, if you will, so you can actually find out, right, how do we actually get here. But I also think that, it's certainly when it comes to things like investing, being able to see the whole picture is the better place to be, in opposed to seeing a small corner of a picture, because that informs opinion, that informs your understanding and your outlook around something. It's been really, really interesting reading about this over the last couple of days and stuff, to kind of understand, right, how did we actually get here. It's very, very interesting indeed. But again, it's a scary, scary, scary place to be. It really, really is. Hey people, hope you're well. Why is the DXY going up, and has been for the last several weeks, considering the inflation rate in the US? The DXY, I can't say that I've actually tracked that one. So this is the US dollar index. So if you look at currencies, I think the USD will be up to date, because like the USD is like the world currency, isn't it? So if you think about people who may hold cash, and this is where you start getting into forex exchange, right? And forex, the exchange rates for cash, the USD is the most popular currency in the world. So imagine, like, if you have a look at the rubles, so which is the Russian currency, that is down massive today. It's down huge. So if you're holding rubles, where do you go? You're not going to stay in rubles. You're probably going to go to USD. So USD will be seeing a huge influx of from other currencies being converted into USD, which will explain why you're seeing the value of the US dollar actually increasing in value, because you're going to see more people try and get into a safer, I guess, currency, which the USD is classed as. You said Russia feared their security, but they have so much firepower. How can they fear anyone? They also made Ukraine abandon all their nuclear power. I know, you know what, and that's another twist to it as well, which is the really messed up side to it. Ukraine gave up all of their nukes, all of their nukes, and it's mad. But the reason why they fear and that's a great sentiment. And again, from a logical point of view, you'll be like, okay, so you got nukes, so no one's going to really try and invade you, because like the whole point of nukes is the fact that it's the guarantee of mutual destruction. If you let off a nuke, someone else is going to let off a nuke, and we're all done for. So they are the deterrent, right? That's the whole purpose of having nukes. They are a deterrent. So why would they fear for their security? Yeah, why? You've got nukes. You've got a massive military, huge military. But the reason why they fear for their security is because of the fact that when you lump in UK, France, Germany, all the NATO state members, and then you put the US on top, which has the largest military in the world. I think China's very, very close behind. Then you put Russia. Now you're looking at David almost versus Goliath. And then that leads you to a situation where actually you run into a position where actually nukes become more of a viable deterrent. And that's why they fear for their security, because it's that combined kind of like military force on their doorstep. I mean, if Ukraine did join and you had, NATO, again, many people will say controlled by the states is the assumption on the doorstep. And they've had a really fractious relationship with the states ever since the days of the Cold War. Why would you want that? That's why. And it's bizarre to think about it when you think about the fact that they have nukes, but that is the fear. Apparently, that is the fear. That's Putin's fear. There's part of people, I've been reading online saying that he just wants to have the Soviet Union as it was. He wants to restore a part of that for nostalgia sake. But it's one of those situations where it's like you never really know what's going on in the mind of a madman. It would seem. It's very, very interesting. My portfolio went from plus 15 to minus 15 since November, and it's quite scary. Would you put more money in the market at the moment, Pete, or wait a while? Look, market volatility can be a good thing, because where market goes, market volatility is where you find the opportunity, because the whole idea is that you buy low and sell high, right? So when you see market volatility, markets dipping, it's an opportunity to get in and get something low, and hopefully when it returns you can actually go and buy high. The answer to this question, again, I can't give you a direct answer, because what I would do isn't necessarily what you will do. We're in very, very different positions. I have zero debt, like apart from a mortgage. I'm relatively comfortable, right? So the risk that I'm able to take is very, very different to what your risk level might be, because again, I don't know what your circumstances are. I guess the question to ask here is, if you've only just started investing, look, mate, I know I've got stocks that are down huge right now that I'm looking at thinking maybe I need to cut my losses. I think I will on maybe 2 or 3 of them. And it's hard to cut your losses when you look at the monetary amount and it stacks up and it's like, oh my God, right, okay, I worked hard for that cash. It's hard to do. So you got to ask yourself, look, there are 2 scenarios potentially. If you're going to put more money in, yes, you've got money in at a lower point than you would have got it if you invested last week or last month, right? So that is maybe a feel good factor, right? I got something at a discount. But you could buy and it continues to dip. You could buy, it could rebound, which is the other scenario. You've got to find peace with the knowledge that could happen when you put more money in. And if you can't stomach that, you don't want to risk it, just stay out and just wait until you're ready. Volatility comes with the territory. When I said it in a video last year, investing in the stock market is very much like going to Disney World, or actually no, go to what's it called? If anyone's been on the Hulk, the ride at Universal, right? It's like that. You're going to be thrown through loops, ups and downs, like massive 360s. You just got to strap in and enjoy the ride. And for many people, it's an adrenaline rush. For some people, they're just scared, like witless, and it's not for them. You've got to decide where you are. You really, really do. And if you've only just started investing, it is scary. You kind of learn that, okay, this comes with the territory. You tend to kind of forget about it. You train yourself to disregard the losses. But again, coming back to personal circumstances, did you do the due diligence? Did you understand the risk, the timeline, all that kind of stuff? Importantly, Have you got an emergency fund? So that minus 15 doesn't represent the possibility of you having to sell at a loss just because, well, we're in a perfect storm where energy prices are going up, fuel prices are going up, food costs are going up, broadband costs will be going up in April, right? Have you got an emergency fund, a cushion of cash there on the side to make sure that you never, ever, ever have to cash in that portfolio at a minus 15? Those are some questions to ask yourself, mate. But if it's too much, maybe take a pause. But if you're okay with the ups and downs, then by all means continue. But just know it is going to be a rough. It's going to be a rough ride from here on out. Russia moved away from dollar dependence. They bought gold. Japan and UK are owing a lot to America. Putin is going to follow China money. Yeah, I wouldn't be surprised one little bit. China and Russia seem to be like that right now. They're locked in steps almost. They're very, 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 very tight. But yeah, it's one of those ones, isn't it? It's so interesting when you look at it from you start talking about the political stances that these countries take and why they make their decisions on, sovereignty and independence comes to the forefront. Seeing that this war is affecting other areas, as you said, is this just going to push up inflation now that QE is no option, or do you think that this will twist their arm to prop it up again? Really, really good question. Possibly. You may see a complete 360 from the likes of the Fed, depending on what happens over the next few weeks, where actually, you know what, they say we need to pop up the markets again, and they reintroduce QE, or they stop the taper. It's going to be very, very interesting to see what's going to happen. But one thing for sure, this will impact the inflation numbers for sure. It will. I mean, look, the world has a dependence on crude oil. I mean, this is the whole point of the EV market, Tesla, renewable energy, sustainable energy. It's the whole point of it. We've been talking about this for years. We need to move away from fossil fuels. And one of the things that we failed to do in the UK is invest adequately in renewable energy. If we had done that, we would not be seeing the hikes in the energy prices right now, because we would have had the facilities, the capability to actually have renewable energy delivered to our homes, but we didn't make the investment. We didn't make a large enough investment when we could have done. And this right now is only going to push forward the agenda on we need to be less dependent on fossil fuels and unsustainable energy sources. It just reinforces the entire argument for that. So this will impact inflation. I'll be very, very surprised if it doesn't have an impact on the inflation numbers over the next month or 2, 3 months. Very, very, very surprised. Jack, how you doing, mate? Is it a good time to buy property in the UK? Good question. I mean, interest rates means that there's not going to be a lot of cheap money around anymore. So potentially, I mean, look, you're going to have the property market equations around supply versus demand are still going to be there. Obviously, interest rates will impact that as well. It could be. I mean, I'm not in the property space. I'm not a property expert, but I think when I listen to a lot of property experts, they're still quite confident in the buoyancy of the UK property market at this point in time. Obviously, interest rates will have a big part to play in that, but then increasing interest rates aren't necessarily a bad thing. If we know that interest rates are going to be increasing, 3 or 4 times over the next 18 months, what that will likely do is move people to buy property now in opposed to putting it off. So we could literally see a period of time once we know what that schedule is going to be a bit more clearly. We might see a boom in the property market as people bring forward their purchases in opposed to postponing it. But I think there will always be a good number of people who want to invest in property because guess what? We need roofs over our heads, and property is that roof. Okay, that's good. Yeah, mate. Look, if you've only got less than 5% position, mate, you probably just hold tight. Hold tight. What are my thoughts on Poland's positions right now? You know what? I don't know a lot about. I mean, my partner's Polish, but she's not really up on the whole political thing. And if I'm honest, I don't really follow Poland's political positions at the minute. I know that they are building NATO facilities in Poland. That's still ongoing at this point in time. But other than that, mate, I can't really give you sort of insights on that. Like I said, I'm not really kind of like a political expert or anything like that. So. Tamas, DM'd you on Insta. You never replied. Apologies, mate. I get so many, and I try to work through them periodically. But yeah, I get so many messages on Instagram. Yeah, and to be honest, my Instagram game is a little weak at the moment because I've got so many things going on. It's focusing on all of the things that are key that I need to get done are very, very challenging a lot of the time. But I will have a look at the DMs to see if I can actually find you in the next day or so. But yeah, apologies. But yeah, I get, mate, the DMs are nuts right now, which is why I try to do live Q&As, because it's an easier way for me to be able to take questions and answer them with that. And I have a dedicated time set aside specifically for that. I did have a period through last year and the pandemic where I would go through my DMs on Instagram like every morning, but I found like I was there for like an hour and a half. And obviously when you respond to a DM on Instagram, you immediately get a response. So it's following up on those responses as well, which meant I was spending more time. I was spending like an hour or maybe two in the mornings just on DMs. Then I would go into the YouTube comments and answer those, and they would probably take another half an hour. And then all of a sudden it's taken up a big portion of my day. So yeah, Q&As are the best ways to get answers to questions, but I will have a look for you on DMs, mate. Oh, interesting. Let's look. I mix race time with a Taiwanese daughter-in-law, and my son is fluent in Mandarin. I'm a retired teacher, hoping to help them retire early through investing. That's good to know. I mean, look, getting them to start early is the most important thing. Time is a gift at the end of the day, and it's the biggest asset that a lot of us will have, or ever have, really. What's the best thing to do right now if you have some cash not yet invested? Put it in a savings account or stocks. You can do both. Obviously, with a savings account, you're not going to get a ton of interest, and obviously, inflation's quite high. So that's an equation that's worthwhile squaring off. If you go and put it in stocks, the markets are quite volatile. So you've got to be happy with the fact that you're exposing it to risk. You could get back less than you actually put in. Um, you definitely shouldn't put money in stocks though if you're going to need that money within the short term. And when I say short term, 3 years, really, 5 years. Um, if you're looking at investing, you need to be 5 years plus, ideally. So yeah, what do you need the money for? Is it going to be earmarked for anything in the near term? I guess that will answer your question. I mean, within the savings accounts, look, you can have a look at things like premium bonds, for example. It's not a guaranteed return, but if you're lucky enough to get one of the prize draws, and they can range anywhere between 25, 50 quid, you can win up to £1 million. It's not guaranteed, but it is tax-free. It's instant access. There is no risk. So that could be a nice home for it, which will be a nice alternative to a savings account potentially. But yeah, I mean, you've got to be happy with the fact that if you put money into the stock market, you're saying you're looking at 5 years. If the market crashes, the last time the market crashed, it took 5 to 7 years to return. So can you afford to sit there with your money in the stock market? The market crashes and you need your money in 5 years, and you possibly have the end scenario being that you've got to cash it in at a loss. That's the real question you need to ask yourself, really. All right, Irene. What's your take on Matterport? The stock value has reduced so much in recent weeks. I don't track Matterport, so I can't give you an insight into it. Hi Pete, been out collecting sticks from around. Rican can't afford the gas any longer. I'll tell you what, mate. Look, if you've got a, I know exactly what you mean, but yeah, the gas prices are absolutely nuts right now. I went from who was I with before? I was with one of the other smaller providers that actually went bankrupt during the pandemic. So I'm back now with British Gas, who I left because the tariffs were so expensive. So I'm back to square one myself. But yeah, I don't have a fireplace, mate, to be able to burn some logs. If I did, that's most definitely what I would be doing because it's a nice way to save money. All right, okay, cool. I've come to the end of all of the questions on here and all the comments. Thank you so much for everyone who's actually dialed into this. I hope you found it useful and informative. Look, very, very interesting times right now. I would just say that, if you are investing, there's a lot of stuff that I've covered in here that I think is worthwhile just bearing in mind. Try not to panic, but also be pragmatic in your view and the fact that, this is a big moment right now. It really, really is. And I know we talked about money and finances here, but when you really get down to the nitty gritty, it's not really about that. It's about security, and if anything, this brings to the forefront of our minds of in a world that we live in today, where money is so important. Do we miss some of the really basic important stuff, the stuff that actually truly matters? Because I'll tell you what, if I was living in Ukraine today and waking up to the sounds of bombs falling, the last thing I'll be thinking about is money, apart from the money that I could get out to get the hell out of there. And even the Ukrainian banks have started to limit the amount that people can withdraw because money supply, it's nuts. It really, really is. But I think ultimately, God knows what's going to happen. But what the West does today is very, very important. Let's remember that, and we just have to monitor this and just wish everyone in Ukraine the best, and hopefully, they keep safe, and this doesn't get protracted out too far. Because, no money in the world is worth loss of life. But anyway, thank you guys for watching. I will catch you tomorrow for my regular Friday video. Cheers.